Hello, my dear friends. This is CH in my Hegde, your learning partner for understanding financial management. Welcome to day 5. Let's learn SFM practically. Uh, Disclaimer first, this is only for educational purposes. You do your own analysis before investing. As usual, we'll be dividing the segments into the day's discussion into 4 segments. The first segment, quote of the day. In investing, what is comfortable is rarely profitable. So if somebody is easily giving you tips, if something is finding it very easy, no, that is not going to be profitable. Okay, let's understand some terms of the day, which is FII data, DII data, market cap, free float market cap. That is our focus today. In market, there are broadly 3 kinds of players. One is FII, foreign institutional investors. Nowadays, it's called as foreign portfolio investors. Then we have domestic institutional investors like PF organization, LIC, mutual funds who are institutions. And then individuals like you and me who are called as retail traders. So broadly 3 pillars, FI, DI, retailers. We always give first preference with respect to FII. Why FII? Because we believe they are more smart. Because they are large institutions, they're coming from foreign country into India. That means they must have experts and they can invest all over the world. Then why are they choosing India or why are they exiting India? That means there should be a proper analysis behind it. So we believe FII data is one of the driving factors for Indian economy. One of you are asking the question, why Indian markets is highly influenced by US movements? One of the reason is this, because of the FII impact. How to check their data? I will tell you today itself, a little bit later when we go to the internet. Then DI, I told you, domestic institution data. Then usually what we say is if FIIs are buying, that is good in a short term. FIIs are selling, that is bad for short term, or market is likely to go down. DII, if they are buying, that means it is in long term basis it is good. DII, they are selling, that means in long term basis that is bad. So this is what broadly these interpretations will be. Data point, I'll come to it later. Then we have market cap, free float market cap. Market cap is very simple, number of shares of the company multiplied by market price per share. Free float means in the number of shares you take out what is held by promoters, because what is held by promoter is not traded on a daily basis. For example, Mukesh Ambani don't trade Reliance share, he does business. He is not having time to do buying selling of his shares. So his shares will not be available in the market for the public to buy and sell. It is not floating in the market. So free float market cap means in the number of shares, take out the promoter's part, and then whatever basically left is public holding multiplied by the number of market price per share, you get free float market cap. We were discussing about the index yesterday, like Nifty. They are mainly depends on the weights determined by free float market cap. These data points like ownership of a company, market cap, FII data is easily available in the websites. You can please go to BSc and NSE website. Then you can check it yourself. If you want me to show it, please have a comment below. Maybe in the subsequent sessions, I will go and check it out. So this is for today terms. Let's see what happened previously. This was our yesterday assessment that market is going to be around 0.5 to 0.6%, right? That was our assessment yesterday. Wrong. Horribly wrong. Market rallied. Rallied means market gone up like anything. Nifty Bank is almost up by 4%. State Bank of India is almost 6%. Indus Bank 9%, 10%. So these banks don't give so much of fixed deposit returns. They are giving the share returns in one day. So Bank Nifty is almost up by 4% yesterday. This one point you need to keep it in down. When the market is going up, pharma sector and IT sector will usually be down. They are called as defensive sector. So when things looks bad, then these stocks will be rallying, will increase. So as a portfolio, if you have, then you should have a banking stocks which are risky stocks as well as pharma IT stocks which are defensive stocks. That's how portfolio balance, diversification can be maintained. And in the Nifty 50, 50 companies, top 50 companies, all 5 top gainers were from banks. Very rarely happened. So banking sector was booming yesterday. One point of concern, wholesale price inflation data came. That's only around 10, which is around 10% inflation, which is alarming because consumer price will be even more higher. But one point, this is comparison with respect to the previous year's data, and previous year's May month, the data is not really reliable one because entire India was under lockdown. Therefore, it may not be that much relevant data, but still a cause of concern. Impact of inflation, impact of interest rates, economical data impact, we'll discuss in subsequent days. And corona cases are reducing. That's what media is reporting, which is a positive event. Now let's look at the future assessment by looking at the chart. So I take out PPT, I'll go to internet. So let's look at chart. Let's look at the local cues. Let's look at Nifty 50 charts. Yesterday you see the chart, it's not showing no sign of weakness. It's simply going up in 5 days. This is the interesting part. You see the market has come down and it has recovered. So even though market is up yesterday, but keep the point in mind, market has not gone up first. Whatever was down in last few days, it recovered. So what is it on 11th May? It is almost in the same situation, in fact slightly below. But why the yesterday rally looks so dramatic? Because 3-4 days loss was entirely covered in one day itself. That's a very rare phenomenon. Usually other way happens. Market slowly goes up, suddenly comes down. But now reverse. Market is slowly coming down, but suddenly going up. This is local cues are positive, things are still recovering. But in my opinion, local cues are still negative. Corona cases are getting controlled, but still most of India under lockdown. State like Karnataka, they're extending the lockdown, so a cause of concern. Let's look at what happened in Nasdaq index for global cues. It was down marginally. Let's look at Dow Jones index. US Dow Jones index average is also down very marginally. So this is what it looks like. Indian market, whatever happened, the recovery took place and it looks dramatic, but the sentiment in the market is positive. Global cues are marginally down because you see Nasdaq and Dow Jones. There's one more called as Singapore Nifty, popularly we call it as SGX Nifty. I have not talked about it yet. That's one of the indicators. That's a Nifty index, but trade in Singapore exchange. Because Singapore starts earlier than India, it is likely to be indicator of what will happen to the Nifty. And it is almost gapping up 160 points. It's showing 160 points up, so almost like 1%, more than 1% actually, almost 1% up. So looking at all these factors, let's go back to the PPT and give our assessments. Okay, so what is our assessment? Local cues are still negative. Global cues are marginally negative. Chart analysis is positive. And what is my take? My take, in short term, that is for next 2-3 days, I will say market is going to be increasing on a positive note. So overall assessment, the market is more on a recovery mode, but giving strong signals. So what is the assessment for today? Today market is definitely going to be positive. The sentiment is positive. Market price will increase, but hold on. We are almost towards the high point in the index. So once it reaches a good point, the people who have bought earlier will make a good profit. They're trying to sell. It's called as profit booking, and that happens means market will come down. But I don't expect that to happen today. I believe that will happen maybe tomorrow or day after tomorrow. And day after tomorrow is also a weekly expiry. Interesting to see what will happen on that day. So SBI share price high yesterday. Explain the reasons. Not only SBI, the share banking sector itself is on a positive mode, and that is the nature. And one important reason is the SBI results are coming up, and expectation is they're likely to give good results, and therefore the SBI stock has gone up. And also PSU stocks, the government of India undertaking stocks, in the last few months are giving very good returns. They are on up move, and adding the more news, that is the latest news that SBI is going to get a likely to get a good results, has added up. That's why SBI has gone up. That's why one of the reasons it has gone up, and is also called as short covering. Like many people have taken short position, now they want to cover it, so they go long. I think at this stage it will be too immature for us, because we are still in day 5. Going forward, I'll explain what is long unwind, short unwind, or a short covering. When I explain the option chain, I would like to discuss more, but not today. We are keeping it in a simple manner, and slowly we'll move into the higher data. Oh, I was supposed to show you the FII data. Sorry, let me just quickly show it to you. Okay, very simple. Just search in the Google FII DII data. You can just go to things like let's say even Money Control, that will tell you everything. That's the simplest. You can go to any website. You see, in cash position in the month of May, that is yesterday, 17th May, FII has purchased 5797 crores, the sales 8,000. Oh, amazing! 2,200 crores FII are still selling. Net purchase by DII is positive. So, still a conflicting point of view between FII and DII. DII have invested, FII has withdrawn. That's what it's mixed signal again, because DIs are believing market will go up, FIs are believing market will come down. So they are having an opposite view here. We are also slightly confused, but today at least I can confidently say market will be on a positive mode. But it will not continue for a long time. It is at a long time high. It has to come down little bit. As I told you, market will not go up on a linear scale. It will go up, it comes down, it go up, comes down, it goes up. That's how the trend is always reflected, either on positive sides or on downsides. I hope you enjoyed the session today, and I hope your learning got better by attending these sessions. So we'll see you tomorrow with new topic, and as usual on a daily assessment. Till then, take care. See you. Bye-bye.